I'm Garry Jones, Global Head of Derivatives at NYSE Euronext. Our global derivatives business includes 4 exchanges, 3 in the US and 1 global exchange called NYSE Liffe based in London. NYSE Liffe covers a wide range of products in the fixed income, equity and commodity worlds, and very importantly, it is an on-exchange listed derivatives markets which utilises a central counterparty for all of our transactions. The NYSE Euronext Global Derivatives business is the 2nd largest exchange in the world by value traded every day and the 3rd by contracts traded. We trade around 9.8 million contracts a day. That has a face value of around 1.8 trillion. I'd like to talk to you a little bit today about the changes in regulation with regard to central counterparties, with regard to more control of the over-the-counter markets, and in particular what we're doing about that now and what we hope to do in the future. The recent financial crisis was very deep and very long-lasting and focused specifically on the need for an expansion of the role of central counterparties. Indeed, coming out of the G20 Summit in Pittsburgh, one of the key goals was to improve the use of central counterparties across markets. The role of central counterparties is extremely important in the sense that it means a AAA counterparty to every trade. It also means that there is netting of positions, and therefore reduction in systemic risk. It also means there's one closing price every day, which is marked to market against for all participants. And if people don't meet the margin call the next morning, the position's closed out. So the use of a central counterparty has many advantages. And a lot of pending regulation starts to move to allow over-the-counter markets also to transact through a central counterparty. There's an inherent need to bring the opaque OTC markets into a cleared environment, and that is why recent regulations in Europe, particularly EMIR and Dodd-Frank in the United States, specifically focus on this. You may have also heard of MiFID and MIFIR. MiFID was the old regulation basically for the equity markets but being expanded to other asset classes. And MIFIR is the new embodiment of MiFID, with MIFIR with an R at the end means a regulation, which means it's mandatory. The D in MiFID meant it was a directive that could be interpreted in other countries. We're all in favour of more mandatory clearing across all of the markets and see this as an important development. NYSE Euronext's position in regulations of this kind is to have the highest possible standard. We're not looking for regulatory arbitrage, we're not looking to make it easier, we're looking to make the markets more secure. We're looking to take some of the best features of the listed markets and bring those into the OTC world. And we fully support all attempts in that direction. But there must be attempts that also keep the markets open and free. We're not in favour of regulations that tend to get in the way of the markets, but rather ones that increase the security of the market and reduce systemic risk. In the second video, I'd like to talk a little bit about commodity derivatives and try and explain to you what our current position is with regard to regulation of those markets, and try and dispel some of the myths that have arisen in commodity derivatives and give you our opinion on what we're really going to work to make the markets more secure.